Coming up on Market to Market, bird flu numbers spike, dropping flock numbers and raising egg prices. Breaking down the livestock and commodity markets in an extended discussion with Jeff French and Ross Baldwin next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next because at Pioneer, our name is our mission.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, January 31 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Inflation remains at the top of mind for the Federal Reserve, which kept the key interest rate unchanged this week, and everyone else watching the positioning ahead of a February 1 trade deadline set by President Trump. The tariffs the president wants would be on America's number 1 and 2 trading partners and could impact inflation. Data this week from the Commerce Department reveals the PCE index moved higher by 0.3% in December and added 2.6% for the year-over-year figure. New home sales were up 3.6% in December as demand drove the otherwise stagnant housing market. Orders for factory goods fell 2.2% last month as items meant to last at least 3 years were down for the 4th time in 5 months. The poultry industry has spent years dealing with avian influenza. Another strain of bird flu has been detected this week in a California duck meat farm. The H5N9 variation discovery will lead to more deaths of birds at a time when flocks all over the country have been impacted. The loss of layers has dramatically cut back egg production and is pushing retail prices higher. Peter Tubbs looks at the numbers involved.
Rampant spread of the H5N1 virus is hitting consumers in their pocketbooks. Retail egg prices across the country have sent Americans scrambling to buy eggs at any price when they can find them.
I have between 1,000 and 2,000 people a day that come to my store and they're looking for eggs.
A jump in infections from the H5N1 avian flu virus has led to over 38 million laying hens and pullets to be slaughtered in an attempt to slow the spread of the virus, according to the USDA. Over 10% of the egg-laying capacity in the United States has been destroyed.
Right now, we can't get any organic, we can't get any cage-free, we can't get any brown. At this point, we're limited to large eggs, jumbo eggs, and 18-count eggs. And they just went up again.
Egg prices have accelerated at the same pace as infections on the farm. Retail prices of over $6 per dozen eggs have become common as 14 million laying hens have been euthanized in each of the last 2 months.
It's the first time in my life that I've ever had to be kind of embarrassed on what I'm selling eggs for, and it's not our fault. We're paying today $7.45 for a dozen eggs. We're selling for $7.59. We're making 14 cents. That doesn't pay the bills.
Over 145 million chickens, turkeys, and other birds have been slaughtered during the current outbreak. California alone has lost 90% of its egg-laying capacity. A return to normal egg prices would require a rapid restocking of the laying flock or a reduction in egg demand. With the rate of infection increasing, egg prices will probably remain inflated for the near future. For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
The livestock market has generated headlines of its own for months, and commodities have been anything but quiet in recent trading. For the grains for the week, the nearby wheat contract added 16 cents and the March corn contract fell a nickel. South American weather is both dry and wet, causing different concerns in the soy complex. The March soybean contract lost 14 cents, while March meal declined $3.80 per ton. March cotton shrank $1.80 per hundredweight. Over in the dairy parlor, March Class 3 milk futures increased 23 cents. The livestock market was mixed. April cattle declined 73 cents. March feeders cut 85 cents. And the April lean hog contract put on 215. In the currency markets, the U.S. dollar index added 101 ticks. March crude oil dropped $1.78 per barrel. COMEX gold expanded $25.50 per ounce. And the Goldman Sachs commodity index fell 9 points to settle at 562 even. Joining us now are two of our regular market analysts, Ross Baldwin and Jeff French. Gentlemen, good to see you both.
Hey, Paul.
Paul, great to be here.
Ross, it kind of timed out. Okay, it was planned. Cattle inventory report today. We had cattle on feed before. This one's a major report. Last year, this report said smallest herd since 1951. We're lower than that again this year. Why?
The herd just continues to be reduced. I mean, we haven't hit a rebuilding phase, and as everyone in the livestock markets knows, it takes 3 years from the time that you start expansion that you start to see numbers pick back up. And we haven't started expansion yet. We've been doing the complete opposite. Prior to this report, the U.S. cow herd has dropped 10% in the previous 3 years. And here, this number, we just had a quick glance at it, every number or every bucket was 1% lower than last year. So these numbers continue to drop, and it was a bullish report.
I know it takes a long time to grow an animal and get the animal to market, but why has this market not responded to expanded herds or keeping back heifers or any of that?
I would say one of the largest reasons that we haven't kept heifers back over the last year, even 2 years, is we've had feeder cattle at record high prices. And with where feeders have been at, it's difficult. It's actually an easy decision for the rancher, but it's difficult to keep them heifers back when you have record high prices. And until we would see something change over the next year or two, it's going to be hard to continue to keep these heifers back. I mean, even feeder cattle prices today, we continue to make new all-time record high prices across the country, and that's just not indicative of expansion.
Are you hearing from people who are in that conundrum of, hey, I need to take advantage of this price, but I also think I could make money down the road?
Well, economically, I mean, it's just the prices are just too good. And you look at the age of the American rancher out there, I mean, you're pushing almost into the 70s. So they're looking at these prices saying, why do I want to battle this for the next 2 to 3 years when I know I can get, $280 or $300 a hundred for this heifer? To me, that's an easy decision, and that's what you see that these ranchers are making. Just absolute historic times. I mean, here on Wednesday this week, you could go out 15 months in the fat cattle and lock in 196. I mean, we've never seen prices like this. And with the reports that we saw here this week, we might have a time where we can sustain some of these higher prices. The numbers are not going to be there for some time. So it's historical. But, like I said, I've been telling my clients, buy some puts, cheap puts out of the money, and let this thing rip higher.
I could show you my question sheet for the last year and a half that is always asking, when is this top coming? But what is it that's going to happen, short of a black swan event, of course, that we cannot predict, but what is it going to take? Because the headline that's going to come real soon is all about grocery store prices, beef is this or that. We all know that's not necessarily the full story, but what is it going to take?
I think you're going to have to see the consumer make some switches. And we just haven't got to that price where the price of ground beef has made the consumer make a big switch. You get ground beef up into $7, $8 a pound. I bought it this week at $6.99 a pound. That's high. So do we see the American consumer when it gets up that price? That's just something that we're going to have to see.
Do you hear that?
I totally agree with it. I think it's going to be more of a demand-driven event that would slow the cattle market down, or some outside news event that none of us can predict or are talking about today, before it's going to be from the cattle fundamentals themselves. The cattle fundamentals, they remain, and this report shows it, they remain tight for this year, and by all rights, they remain tight all the way through 2026. So it's going to be something where you have to essentially price yourself out and do some demand destruction, and we're just not there yet today. We've seen beef demand, I mean, it's the strongest beef demand we've seen in the last 40 years.
And then you add tariffs potentially on Canada and Mexico feeder cattle. We bring in a lot of feeder cattle from both those countries. So you team that up with the positive bullish report. Again, I wouldn't want to be selling futures at these prices.
The tariffs are the wild card for the beef industry.
Well, Rodney in Wisconsin actually did have this question. He's had it 2 weeks in a row. Rodney, thank you for your patience in writing it twice. He's asking if the Mexican border opens to cattle again. So that's if we're on the other side of it. What will that do to the cattle prices for both fat and feeders?
If you look back when the restrictions were put in place in late November, the feeder cattle board has rallied $25 to $30 since those restrictions were put in place. So we have exploded higher. I would say largely due to those restrictions that are put in place. So if the border would get reopened, and that's been a rumor for the last couple of weeks that it was going to reopen. This week they were saying it was going to reopen, and there still has not been a definitive answer that it has. But if that border reopens, then you could start to see some pressure on the feeder cattle market. And I think you'll see it reflected first in the sales across the country, especially down the south. You'll see it reflected in the feeder cattle index. But right now we're not seeing any indication of that. And now we got all this tariff talk that's going on. Right now, if there's no clear line in the sand on what's being tariffed, but let's just say there was tariffs put on feeder cattle. And we import, it's roughly 100 to 125,000 head of feeders a month from Mexico. We import a lot of feeder cattle from Canada also. So you're going to have to see what happens and what comes out with these tariffs, but it could have a big impact.
If is the key word in this, Jeff. But this seems like we've seen how this plays a little bit. We've already seen this administration maybe bark, but the bite isn't as sharp this time. Is that how you're reading things?
No, I'm not reading things like that. I mean, I think, President Trump, when he speaks, that's exactly what he's going to do. I mean, we saw Friday, there was a report that the tariffs were going to be pushed back until March 1st. Then the press secretary had a news conference saying, no, the tariffs will begin on February 1st, which is, this coming Saturday. So what do the responding countries, are there retaliatory tariffs? Do these countries cave quickly? We've seen a country like Colombia last Sunday cave within, 45 minutes. So it's going to be an active weekend.
There could be exemptions, too, on certain products. So that's another one to pay attention
Absolutely.
to.
Let's talk about another product that Mexico buys, corn.
Yeah.
Is there any influence in the corn market in your eyes in the movement of that commodity?
A little bit, maybe in the late week action. We did gap lower Thursday night into Friday, and we did keep that gap open. But we did hold the key support. I mean, right now I'm looking at 477 in March. That's my key number. That was this week's low. If we take that out, I think you could see, the funds, which are long probably 350,000 contracts, you could see them turn into more sellers. But it's going to see what develops here with Mexico. Do they put a retaliatory tariff on us, or do they say, hey, let's work this out? I mean, the tariff is a action per se tariff. I mean, Howard Lutnick, testified in front of Congress here this week. He wants to see the border close and the flow of fentanyl stopped. And then those 25% tariffs will come down. They're talking about other tariffs beginning down in April, but that's for the trade tariffs. So action can happen quickly, and this weekend is going to be a big deal.
Aaron in Iowa's question is very similar to what you just said, Jeff, but I want to make sure we tie it all up because he's asking, now that we're back to halfway between major technical support and resistance turning points for corn, what do you think we will more likely break first, the 477 area or new highs?
I think it's going to be what happens here over the weekend with Mexico, particularly. I mean, they are our biggest corn buyer, so we'll see what develops. But we've come a long way. We are 90 cents off of the contract lows set back there in August. And these prices work for a lot of producers. So we've been aggressive on selling some cash here this week and then protecting some downside, putting the risk on paper here.
Ross, you're in an area, it's a pretty good corn growing area of Iowa. And are you hearing anybody that's swapping one set of acres to maybe write out and put the word corn?
We're hearing a fair amount of that where you're hearing guys switching beans to more corn this next year. So I think we're going to see quite a bit of that occur here.
Do you think it is reflective on what Jeff's saying for price and taking advantage, or beans just don't look good?
I think both. I mean, the bean economics of beans here, they've been difficult, and it's just more favorable when you look at what the potential for corn is and where the prices have been at.
Soybeans, you liked my line, I think, of wet and dry, and that's been two stories. Brazil is wet, which is delaying the harvest, and it's dry, or it's wet in Argentina, or it's dry in Argentina, I'll get it right. But they're both impacting us. Why?
Well, because it's the story. I mean, that's something to talk about. And personally, I think the northern wet Brazil is kind of overplayed. You know, we see market analysts overplay the wetness or late planting scenario up here in the States. The bottom line is Brazil is going to, in the next 6 weeks, harvest more beans than they ever had in history. And we can discuss and argue, is it 170 million metric tons or 175 million metric tons? But they have a huge harvest coming on the world market. And you look at the other countries with Argentina, I mean, they're going to be producing down in South America anywhere from 8 to 8.5 billion bushels of beans here in the next 3 months. Where does it all go?
Well, in the United States, there's this talk of this 45Z. There's talk of renewable efforts to eat up some of the soybean crop. Where do you see that playing in on the marketplace right now?
Well, that's the uncertainty. I mean, we did nominate and confirm a new EPA secretary this week. But I think you're probably months away from the answers that we have on all those renewables.
Can we wait months?
I don't know if we have I don't think we have a choice right now.
But what happens in that time frame? I mean, do you find that there's concern on that uncertainty? That's what opens the door to volatility, and some people don't necessarily like that.
Well, I just, I look at the numbers, and with the supply of beans and with potential trade war 2.0 with China, I just think that beans have potential multiple dollars of downside if it all goes, the word would be bad, if it goes bad. I just think from a pure economical standpoint, these beans potentially have more downside here.
Do you have any more support for wheat?
You look at the wheat market, I mean, we've been in this 3-month trading range. We get down to 530, and then we bounce, and then we just can't get through that 570 area. And wheat has been a function of, we've had the corn rallying and the beans rallying. The funds have been piling on the long side of the corn and beans, but they've used the wheat leg as selling the wheat against that. So they've been spreading the wheat, and that's been the loser in the scenario. Personally, I think we're carving out a low here. But for me to re-own wheat, we got to get above that 570 area.
Do you have an anticipation that story, the weather story, has been overplayed in the United States or in Europe that's impacting wheat and the supply?
I don't know if it's been overplayed, but we're not going to know if the damage is done until April or May. So I think we're kind of just waiting that out. But if you look at the wheat stocks around the world, and we've talked about this here in previous shows, I mean, if you look at it, I mean, we're at 8 to 10 year lows in the carryout. So if there's one thing that has more potential the upside, I think the wheat here. But, we're going to be dealing with a very strong U.S. dollar here for some time. It's going to be an uphill battle.
And forgive me on the dollar and the livestock market, because I don't fully always grasp how much of an impact is it for
a high dollar. It has an impact just on any exportable good. So while our exports have been going quite a bit lower over the last few years with the tight numbers that we have, it certainly can have an impact on our beef exports moving forward if the dollar stays higher, goes higher. Right now, we haven't seen a huge impact to it, but there's no question. I mean, exports have been trending lower, but most of that's just been due to the fundamental tightness of the U.S. beef market.
Listening to what Jeff has said about these three, which one from a livestock perspective? Now, granted, we're at prices, so I don't know if that heightens the attention you have to pay attention to the wheat, corn, soybeans. Which one of the three keeps you up at night the most?
I mean, corn is the biggest one for the livestock market. Right now, when you just take $5 is where the nearby corn futures have rallied up to. Now, basis has really softened up across the corn belt. So cash corn's not at $5, but say 480 cash corn, it doesn't give a whole lot of heartburn across the cattle industry right now when you got $2 fat cattle. Obviously, cash is $2.10 to $2.12 up here in the north, but with $2 fat cattle, $5 corn, it's really a moot point. And a lot of our feed ingredients, I mean, there's no shortage of hay across the Midwest. A lot of the feed is quite a bit cheaper. I mean, cost of gains, I mean, if you bought your corn this last fall that you put a pile of corn up for, your cost of gain is around $1, maybe a little bit less. Even with the rally in corn here recently and interest where it is, you're looking at a $1.05 type cost of gain. So the cost of gain, I mean, it's very manageable with where fat cattle are.
Speaking of cost of gain, we've actually not been cold like we normally are in the winter. Does that have any impact? We're going to not go through as much?
Absolutely. This has been some of the best cattle feeding conditions that we've seen in the north in a long time. Last year, it was kind of a tale of two stories. Out west, they had rougher feeding conditions. Where I'm at, ours weren't terrible. Now this year, it's been really good across most of the entire northern feeding region. And we're seeing that. I mean, cattle performance has been through the roof. Weights have obviously been high. Weights are coming down here recently over the last couple of weeks, but seasonally they should. But weights remain record large, and a lot of that's attributed, number one, days on feed, but then number two, the favorable feeding conditions we've had.
What was your feed question you had for him before we started rolling? You had one about, we talk about feeding wheat, but feeding something else. Are you hearing? Are you hearing anything about that?
Don't hear a lot about sorghum, but wheat, that is another good point that wheat has, or bucket for wheat, is that you're hearing of wheat working into feeding rations with the rally that corn has had and where the price of wheat's been. So that's something to keep on people's radars for what Jeff was talking about, wheat having a supportive story here down at these levels.
Well, how supportive can it be? I mean, it can't move the needle that much right now, can it?
Well, I mean, it's one of those things where how long do the funds want to pressure this thing down, specifically the wheat? And then you look at the other side of the coin is how long do they want to hold this corn long position? I mean, now they're long 350,000 contracts. I mean, that's getting up there. The record long, I think, is 429,000 contracts. And we're dealing with, mostly $4 corn. I mean, we haven't really moved the needle that far when you look at past performances of the funds. I mean, they've been long corn at $5 and $6 levels before. So how far they push us up, we'll just have to see. But, this weekend's going to be big with the tariffs announcements and what comes out of D.C.
Well, I'd asked him about acres. I need to ask you kind of a question too. Bradley in Nebraska wanted to know, because he had heard this at a meeting this week, how much more does cotton need to rally to steal acres from corn?
Quite a bit. I actually spoke with 3 producers, 2 in the Delta and 1 out west, and they all gave different answers. But, cotton is it's a market searching for demand. I mean, that chart just goes lower and lower and lower. So you got new crop cotton down at $68 a pound. Spoke with 3 producers, and they all gave 3 different answers. Down south, it was 75 to 80 cents. Out west, my Kansas client, he said 85 cents for me to switch cotton acres into corn. So it's got to raise quite a bit to buy back those corn acres.
Acres is a story. One other thing that we need to talk about is the hog market. That is one that has it's been a little different than livestock. What's the story right now in hogs for you?
Hogs, they rallied again this week. They've had a good run. The deferred hog contracts have been making contract highs here again this week. The hog numbers have been tighter than what was originally forecast several months ago. And with high dollar beef, it is going to support hogs. If you look back at 2014, now hogs had a different story back in 2014 when live cattle went up to $1.75, but hogs were well over $1.20 back then. Now, I'm not saying they're going to go that high right now, but hogs got a story. When you have $2 fat cattle and above that, it's going to be supportive to where pork prices are. Now, the flip side is if something would cause cattle to maybe sell off at some point, it could be negative for hogs. But I do think the biggest thing to watch for the hog market, it's the same thing we're talking about with everything with tariffs. Watch the tariffs with Mexico. Mexico is the #1 buyer of U.S. pork by a long shot. It's not even close to where the #2 buyer is. So tariffs and the pork industry, tariffs to Mexico in regards to pork could have big implications if there was something to come out of that.
Jeff, final 30 seconds. Do you see anything other on your plate Saturday than watching what comes out of Washington?
Well, and how long it lasts. But you got to look at these markets. We've come a long ways, especially in this old crop, the corn and beans. these markets at these levels can go much lower. So offset some of that risk, and hopefully they can get a deal done. I mean, we have a business-minded president, and he knows how to negotiate, and we'll see what comes up here in the next couple days.
Thank you. Good to see you. I got to say goodbye.
Great being here. Thank you.
Thanks, Paul. Thank you very much, Ross. Thank you, Jeff. Thank you for watching. We're going to pause the analysis, continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. We know social media is not the only way to communicate, and if you want to write us an old-fashioned email, our inbox is always open. Drop us a line at markettomarket@iowapbs.org. Next week, hope for the decimated Florida citrus industry. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.